Welcome to this detailed analytical summary of the recent cryptocurrency market surge, where we delve deeply into Bitcoin's remarkable new all-time highs of $109,450 achieved on January 20th, 2026, and Ripple's prominent and significant presence at the World Economic Forum in Davos, Switzerland, from January 20th to 24th, highlighting key developments that are shaping the market landscape for professional investors and analysts. The total cryptocurrency market capitalization has climbed to an impressive $3.47 trillion, marking an 18% increase over the last 7 days, a surge primarily driven by renewed institutional interest following the 2024 Bitcoin halving and expanded spot ETF inflows that have reached $42 billion year-to-date, signaling strong confidence from major financial players. Bitcoin reached a new all-time high of $109,450 on January 20th, 2026, reflecting a solid 12.5% increase over the past week and an even more substantial 28% gain month-to-date, underscoring the cryptocurrency's robust momentum amid favorable market conditions and growing adoption. Bitcoin's trading volume spiked dramatically to $98 billion in the last 24 hours, with key technical support levels identified at $102,000 and resistance at $112,000. Furthermore, on-chain data reveals that institutions now hold 1.2 million BTC, representing a 15% increase from December 2025 levels, which highlights the deepening institutional involvement in the asset class. Ripple garnered significant attention at the World Economic Forum in Davos, Switzerland, from January 20th to 24th, 2026, where CEO Brad Garlinghouse delivered a compelling keynote address titled "Tokenized Assets and Cross-Border Payments in a Multipolar World," drawing substantial interest from global financial leaders and policymakers. In that keynote, Garlinghouse announced a strategic partnership with the Bank for International Settlements for innovative pilot programs on the XRP ledger, specifically focusing on central bank digital currency interoperability involving 12 central banks, including those from Brazil, the UAE, and Singapore, aiming to enhance cross-border payment efficiencies. Amidst these high-profile developments, XRP's price surged an impressive 32% to $3.42, marking its highest level since 2018, accompanied by a 24-hour trading volume of $22.5 billion and a market capitalization of $192 billion, firmly positioning it as the third largest cryptocurrency behind Bitcoin and Ethereum. Additionally, Ripple's on-demand liquidity volume hit $15 billion quarterly, up 45% year-over-year. Beyond Bitcoin and XRP, Ethereum is trading at $5,020, reflecting a 14% increase, while Solana stands at $285, up 22%, both contributing significantly to an overall 20% rise in the altcoin index. This broader strength is bolstered by factors such as MicroStrategy's recent purchase of an additional 50,000 BTC for $5.2 billion and BlackRock's IBIT ETF, surpassing $25 billion in assets under management. However, the market continues to face inherent risks, including Bitcoin's elevated 30-day volatility measuring 45%, the potential for Federal Reserve rate hikes in the first quarter of 2026, and the lingering remnants of the SEC Ripple litigation despite Ripple's partial victory in 2024, all of which investors must carefully consider in their strategies. Looking ahead, analysts project sustained momentum if Bitcoin maintains support above $105,000, with XRP potentially targeting $4.50 fueled by the ongoing Davos momentum, and the total market capitalization possibly reaching $4 trillion by the end of February, should ETF inflows continue at the current pace of approximately $1 billion per day. In summary, the crypto market is experiencing significant and multifaceted growth driven by institutional adoption, strategic partnerships like Ripple's with the BIS, and strong price performances across major assets, all while navigating complex regulatory landscapes and inherent market volatility. We will continue to monitor these critical developments closely for our audience of professional crypto investors and analysts.